Hunter, how are you?
I'm doing great. How you doing?
Good, man. Good to see you. I've been doing a little background, watching some of your videos in the past. I probably picked some bad ones out because it was in the super bear market and you were getting hammered by some newscaster.
Oh man, sounds right. Sounds right. Sounds like a quintessential vibe.
Yeah, exactly. How's life going here on February the 14th? I just did the primer for this show introducing you. So I'm probably not going to go through all that. But guys, this is Hunter Horsley. We've been waiting for our Bitwise CEO, co-founder, economics background at Wharton. Correct, Hunter? That's how you kind of ended up in this math game.
Yeah, I went to the Wharton School, but then went into software and to Instagram and Facebook to be a product manager before getting to see the two come together with digital assets.
Yeah, I was looking at your background, and if you don't mind, we can just jump into this thing pretty quick. But I was really fascinated with the Instagram, Facebook piece. Did not realize that. What drew you away from there and took you into this path? Because that was pretty early on Facebook, Instagram's journey, right?
Yeah, at the time for Instagram, I think maybe it was 100 employees, 300 million users, and it was at maybe 70 million of revenue. So it was just getting going on the monetization side, which is where I was where I was working. And then went over to the Facebook side. I think your question was what drew me to the digital asset space. Is that right?
Yeah. I would have thought that, being at Instagram, Facebook at that period of time. I mean, you've been at Bitwise now 10. Y'all been going, sitting a short journey, right? So you left.
No, it's not a short journey. I think it's been 6 or 7 years, and feels like a lifetime. In this space, they're like dog years or something like that. Feels like it's been a long time. Yeah.
Yeah, well, that's true of all startups, man. I tell people that have never been an entrepreneur or a startup builder that, hey, look, it's a lonely, lonely journey. 5 years feels like 15.
Mhm.
But that was my question, is like the Bitwise role that you have now had to be quite a risky venture when Instagram and Facebook are just getting ready to explode, right? So, I mean, that's my question. Why did you leave that and come into this? I think you're going to be proven to be very, very right. But it was a pretty big, you were leaving a nice, big, strong mountain.
Yeah.
You know what I'm
Oh
saying?
man, isn't that the truth? Isn't that the truth? You went from feeling pretty cool to feeling like maybe an idiot.
Yeah.
And as you know, in 2017 and even today, some people really get worked up about the idea of Bitcoin and think you're up to no good or think you're maybe not maybe you're a moron. And so going from a job that I loved and was really fortunate to have and great colleagues at a place like Facebook and Instagram to this space and trying to build something new was definitely a different experience. And there's actually in 2018 I was doing a Bloomberg interview, and at that point 2018 was a bear market. I think Ethereum was down something like 90% at its steepest moment, and I went on Bloomberg and was trying to imagine all the questions that they might ask, so I can be thoughtful and prepared. And then maybe a minute and a half, 2 minutes into the interview, she goes, "So are you going to try to get your job back at Facebook?" And I had not prepared for that, but that was sort of the energy of that moment, which you probably remember. So a very different thing. I could say a little about my thinking in coming into the space, but
Please.
certainly it was quite a transition.
Yeah, that's what I would like is, hey, what was your thesis to move from Facebook and Instagram to this? This is 2000 and you're talking about 2018, 2017.
Yeah.
Markets like very rough, right?
Mhm.
What was the core thesis for you to do that? I mean, you had
Yeah.
to spend a couple of weekends convincing your wife of this, right?
Well, I wasn't married at the time. Probably would have been a harder task. Happy to be married today. At Facebook, there are three things that you get to witness firsthand. Um, One, you get to see the unbelievable scale and reach of the internet. I was on a safari in Africa this summer, driving through this small town. Maybe it's 100 people in these concrete block buildings. Water's coming from a well. There's food being carried on the head, but they have Coca-Cola, they have Vodafone, and they have Facebook. Facebook has, the internet has a way of reaching to every corner of this earth. And I think Facebook today has over 3 billion users. So at Facebook, you get to see that the internet is this extraordinary scale. A second thing that you see at Facebook, especially if you're building products, which I was doing as a product manager, is how fragmented the world is. I think we've never been more aware of other countries, other people, other cultures, but they're just as different as they've always been. And when you're building at Facebook, you realize there's over 170 countries, over 170 rules of law, over 170 languages, over 170 currencies, over 170 financial systems, over 170, pieces of infrastructure. There's over 100, feels like over 100 versions of Android phones that you have to build for around the world. And so underneath that, the hood and underneath that headline number, the world is still very divided and fragmented, even if it can see each other better than before. And the third thing that you witness at Facebook, and I think at this point is apparent to everyone, is that in the era of social media, where everyone can publish and everyone can share their thoughts, which is so native in 2024 that it almost sounds banal to point out, but that was newer over the last decade, that people had that capability. On Facebook, suddenly everyone had 500 to 1,000 followers to their blog and their thoughts. And you didn't just get information from the nightly news, you could also get information from the people around you. And what resulted from that was people telling stories of their experiences that over time has caused people to lose trust in a lot of political leaders, in a lot of business leaders, public figures, educational systems. And so you sort of see all of those three things firsthand at a place like Facebook. And then when you encounter and see the Bitcoin blockchain and public blockchains, you get to witness this beautiful thing. It's a new technology platform that leverages the scale of the internet. It solves for the issue of fragmentation by introducing one global standard. Look at that animation there. That was extraordinary. And it addresses the degradation of trust by doing away with the leader and inventing a way for people to trust each other and engage peer-to-peer. And that's pretty profound in the context of sort of watching those trends at Facebook, and made me think, so I left Facebook in late 2016, started Bitwise in 2017, and made me think, even at that time, there's a ton of risk, ton of reasons it may not work out, but it had the potential to be something profound and something meaningful. At Wharton, I was the teaching assistant for the history of business class. I was also very, very close with my grandmother, who was born in the 1920s. And through both of those things, I got an appreciation for how much the world can change in a lifetime. For my grandmother, she saw the advent of, the popularization of cars, the advent of the airplane, the advent of the refrigerator and the dishwasher, the radio, the television, the air conditioner, to say nothing of the internet, the iPhone, and the computer. And that all happened in one person's lifetime. So when you consider that, I think it also stands to reason, at least from my point of view, that the world can change a lot in our lifetimes. And if you look around and say, well, what are the vectors? What are the areas where the world has the potential to change a lot and for the better? It was with that experience at Facebook that looking at a public blockchain, I said, wow, this definitely could be the future. And it would make a lot of sense to me if 20 years from now, we had embraced the benefits that are possible from the public blockchain. So there's a lot of reasons why it may not work out, but it would be really meaningful to get to be a part of helping steward this space. And that really drew me to trying to contribute something useful in the category.
Yeah, well, I think that it's going to prove to be an awesome, awesome move for you. I didn't expect this conversation to go here, but just focus a little bit on Facebook right now. Bitcoin's price today is 51,737. We're post ETF by even the greatest naysayers. I think the ETF has been a monster success, even with Grayscale pumping out probably about a third, 25% of their volume has just been puked into this market, and the price has held up exceptionally well. The reason I'm getting to that is I'm an ex-energy guy, and I look at the component parts that make up a price. Call it $100 crude oil. Hey, what makes that up? I know the Saudis can, create it for about $57. Americans about 45. Nat gas is $1.83. Yeah, I like to see, hey, what makes up the value of that? When you talked about Facebook, I've been asking questions recently to people, because you and I would probably never have met had it not been for the conversation of Bitcoin. Mm-hmm. I have met thousands of people now, thousands, literally, people that have CEO titles, people that have no titles. And if Facebook is valued at 1.3 billion, this is my question for you. Mm-hmm. What part of that $1.3 trillion of valuation is made up just of the community impact, the ability for you and I don't use Facebook, don't particularly like it, but that's fine. I mean, it's, I don't go to the school playground either, right? And play with it. So do you have some sense of what really the question is, hey, out of this $51,000, what part of it is priced in for the experience that you and I are having, just being able to connect to each other?
Yeah. I think that's everything. I think that, the invention here is enabling a disparate set of people around the world to connect on the same level, on the same basis, with the same understanding about the rules of the road, the same understanding about what's possible. And of course, that allows a community to form because you have that platform of shared understanding. So, you can, one of the things that makes, I think, blockchains and Bitcoin so fascinating is you can view it through many different lenses. So, you can say this global public standard is an incredible payments rail and a new innovation in the movement of money. But I think there's another way of viewing it, which is it's also a platform for humans to organize and for humans to come together with a common understanding. So I think that it's a huge component. To relate this a little bit to
you think some price of the 51.7 right now has some intrinsic value for the community effect? Because I actually think the 51.7 is still a good $40,000 or $50,000 short just on the supply and demand. Because this planet, you and I have never seen a finite resource ever in the history of the world. We have never found a finite resource other than you and I. Like, Bitcoin's actually teaching me how valuable you and I are as unique entities. Someone placed us on this planet. They didn't place a bunch, flowers aren't all perfectly unique, right? I mean, they probably are, in fact, but you get my point. Like, there's many other conversations, including war, that are bringing people together in Twitter rooms and spaces. But this subject is combining that fragmentation you talked about, the 170 different cultures, rules, reasons, blah, 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 funding. This is almost like a roundabout. The English roundabout doesn't really interfere with the 170 countries. But if you want to come park your car in this roundabout, Bitcoin really facilitates some flow in between these old worlds and the new world.
Yeah, totally. I totally agree with you. And I think it's one of the, again, the really profound things. It's hard to find exactly the words to describe it. I think in a software sense, you would say that it's a global standard. In the
There you
same
go.
way that, SMTP is an internet standard that allows people around the world to communicate and send each other emails without having to deal with the postal systems of each country and community forms around that. At first, maybe it's a few professors in the early days of SMTP at universities around the world who are able to suddenly share ideas and realize the connection that they couldn't realize before. And then it grows and grows and grows. And today, you can have a relationship through email with like-minded people, regardless of their physical location. And that's the power of a global standard. And I think similarly, Bitcoin and public blockchains establish these global standards. And we primarily talk about them and think about them for their utility, their role as an application layer, platform, or a payment utility or investment utility. But standards allow communities to form, and I think that's definitely taking place with Bitcoin and public blockchains.
Yeah, I have been very, very surprised. I mean, the only example I can use, and I think I offend some people in the Bitcoin community, but the only similar example of this kind of thing that has the characteristics is a religion. Yeah. Like I see this a little bit as at least a philosophical construct for people to start thinking with. I have been introduced to some, like I've been in 4 industries, man. I have been introduced to some really beautiful, spectacular, creative, resourceful, productive human beings. Now, there's some scammers out there, cool, but like there are a lot of really productive people in this industry who seem to have a really good base foundation of what they believe in, which is a marked change from just being in the oil and gas business or the payments industry. I always felt like I was taking advantage of the weakest guy at the table. And Bitcoin seems to me a way that equalizes and normalizes all people's strengths and weaknesses.
Yeah.
The only weakness you're going to have is if you overthink it and don't participate at the table.
Yeah. I totally
right?
do that.
If you do this,
right.
You're going to lose on this one.
Right. Yeah. I think that's one of the beautiful things that you've experienced, I've experienced, and I imagine most people in this space have experienced, which is that it brings people who are sort of kindred spirits in thought together, and who share a point of view or a set of values, or an open-mindedness or a way of thinking, and it allows people to connect who might otherwise not have connected. And I think sometimes people even have you ever been to was it Bitcoin Miami, the giant conference? It's a motley crew of thousands of people, but because again they share this common understanding of a global standard, and they have related open-mindedness and views that bring them to seeing the value of that. It's kind of extraordinary how it can bridge people together that otherwise might not have connected or might not have realized that they were of similar minds.
Oh yeah, for sure. And I mean, like there's never a topic about what your politics, what your religion is, there's not, we have enough core, I always say that it's a lot easier for you and I to figure out what we don't agree on than what we do agree on. And people spend less time on, hey, let's just figure out what we do agree on. I'm sure there's a lot of stuff we disagree on, but who cares about that part? What do I agree with, and how can I make progress? So let's get to Bitwise. Can you explain?
Can I just say two more thoughts on that?
Please.
I have a business thought and a culture thought. The culture thought that is kind of mind-bending but somewhat exciting to think about is that because Bitcoin is open and anyone can invest in it, and public blockchains, and anyone can be part of the movement, can contribute something, can be an owner. A phenomenon is emerging where people who don't historically have resources to allocate are becoming wealthy with resources, and in a position to allocate resources. What do I mean by that? If you look at the names on buildings at the top universities in the country, there's usually a similar story. A brilliant person who went to an amazing university. They went to Harvard. They went out into the world, usually to New York, sometimes to San Francisco or somewhere else, Houston, Dallas. They got into business. They earned a fortune through the endeavor of business, and then they wanted to leave legacy or they wanted to give back, and they put their name on a building. People who go up through that journey, it may sound different, but it's actually a very similar journey. And it results in the people who have resources having very similar preferences. What do they want to do with those resources? They want to donate them to nonprofits. They want to put their name on a building. They want to buy a Jeffrey Koons art piece, and they want to have a beautiful home. And that is sort of the conventional set of ways that somebody who has come up through the traditional paths of gaining resources. You can look at the Forbes, billionaire list. It's not that broad a set of journeys on there. And because there's a similar set of journeys, there's a similar set of decisions that those people make based on those values and those experiences with what to do with the resources. Crypto changes all of that. There are now people who have $10 billion, $1 million that they can allocate to whatever they see fit, who do not care about Harvard. They couldn't be less interested in taking that $10 billion and putting their name on a building. They couldn't be less interested in Jeffrey Koons' art sculptures. They're interested in other things, and they have never had the opportunity to put the weight of resources behind those things that they value. You saw a microcosm of that with the NFT movement. People said, how in the world could people decide to spend $50,000 on this picture of a degenerate ape? It's just a microcosm of the fact, and that of course seems silly and whimsical, but of the fact that different decisions are going to be made by people who have excess resources, because the journey of acquiring those resources was a very different path and set of life experiences than the conventional journeys we're familiar with in the 20th, late 20th and early 21st century. You may see people who'd rather build a small village for their friends than attend the Met Gala. And so I think that is a fascinating second order effect of the open nature of public blockchains. And as they become more valuable, it's endowed people with resources. And the world, I think, has not really seen before what people with different backgrounds and values would do if they had $1 million, if they had $10 billion. So I think that's an exciting second order effect. It's not in focus at the moment. You see little windows into it with things like PFPs. But I think that will be a story if the space continues to be successful, which is suddenly you have millionaires and billionaires who care about different things. And I think that's quite exciting. The other thing I would say around this community dynamic that you're describing, so that's a culture point. As a business point, I think that sometimes when people think about, I think it's intuitive to many people that technology businesses can be extremely valuable. There are two types of technology businesses. One type is you invent something very hard and extremely useful. You're SpaceX. You figure out how to send rockets into space and bring them home. You're NVIDIA. You figure out how to get transistors made, to package them up, put a software layer on top, and it can run computation at a speed and throughput that's not possible. You're Intel. You figure out how to put more transistors on a smaller chip processor. You build a $7 billion fabrication facility, and you go to the market and say, hey, would you like a faster computer for less money? And the market says, yeah, that sounds great. SpaceX goes and says, hey, do you want to send a satellite to space for less money? And the market goes, yeah, that sounds great. That's one type of technology business. There's another type of technology business, and that is network effects businesses. That's Facebook, that's Uber, that's Airbnb, that's eBay, that's WhatsApp. These are businesses, they haven't figured out how to jam more transistors on a silicon wafer. They haven't figured out breakthroughs in physics. They have leveraged technology to build a network effect of a community that compounds. and becomes an unstoppable force and a flywheel. And public blockchains are because they're complicated. People, I think, often think that they're NVIDIA or SpaceX, but they're actually network effects businesses, where the number of people on the platform using the standard, integrating with the standard, building apps on the standard, create a flywheel that spins faster and faster. And it's a reason that you can see this firsthand in the crypto space. Somebody can launch a brilliant new public blockchain or coin that has a lot of great innovations, but it doesn't take off. Why is that?
Right.
Because you're not in the chips business. You're in the network effects business. And so, for that reason, the culture comments are just something I'm fascinated by. But from an investing and business perspective, understanding that these are network effects businesses, I think, is a mental framework that helps interpret a lot of the developments, and is also a way in which the community of something like Bitcoin or Ethereum or Solana or what have you is not just a sort of silly incidental thing, but it is actually quite core to what makes a network effect powerful. So I think it's a very exciting element of these blockchains.
Yeah, no, I agree with you. And I think the other piece to that is when I think about analogies that would compare Bitcoin's Ecosphere, for lack of a better word. I was with 2 weeks ago with a venture fund that just started deploying. In fact, for me, it was the news of last week. It was a buddy of mine said, "Hey, look, we just deployed $4 million into 250 families into Bitcoin." That was 3 weeks after meeting me, and I spent some time with them. I don't necessarily think they did it just because of me. But what I find absolutely fascinating, these 250 families don't even know they've been allocated Bitcoin.
Huh.
But I think that's the way this works, right? I think people think that this community is going to get bigger by the community outsiders raising their hand. I want to come into the community through Wall Street. That's not the way this works. The Wall Street commission salesman is going to start pitching and selling and allocating Bitcoin to these people's portfolios, those guys that are marked moderate risk to greater risk, right?
Mm-hmm.
That's what I wanted to maybe talk through with the audience, how these actually work. Because a lot of the people that are probably listening to this they don't have a stock fund with BlackRock or Fidelity. Mm-hmm. So are you starting to see inflows? And maybe just talk a little bit about what is Bitwise trying to do?
Sure.
And are you seeing the same thing I'm seeing, which is allocations are beginning to occur without the knowledge of the core investor?
Absolutely. So maybe I can describe what Bitwise does for a second, and then I can talk about what we're seeing there. So Bitwise is a leading cryptocurrency asset manager. We create funds, ETFs, index funds, private funds that allow investors to take advantage of the opportunities in the space, to invest in the opportunities of the space, but to do it with the benefit of us professionally managing, securely storing the assets. If it's an index, us rebalancing the portfolio and evaluating assets, preparing taxes, getting it audited so people can have peace of mind and can focus on what do I want exposure to, and not worry so much about, is the way that I got exposure going to blow up on me? Did I do something wrong? In many ways, it's, I think many people are familiar with Vanguard, or they might be familiar with BlackRock. We play that role, but we do it as a specialist. We only focus on this space. We combine backgrounds in software with backgrounds in asset management, because if you were investing in real estate with Blackstone, you'd say, I sure hope that they understand zoning, and I hope that they understand architecture and building materials and general contractors. Well, similarly, I think if investors are entrusting us to steward their investment through this space, which is open source software, if we're going to be the best of breed partner for them, we need to natively understand software and the developers behind it, and understand the difference between Rust and OCaml and so on and so forth. So That's the role that we play. We've been doing it for over 6 years. We have successfully avoided all of the blowups in the space for clients, which I'm very proud of. We manage over $2 billion on behalf of our clients across over a dozen different funds. To transition to your point, who are our clients?
And
Investors.
that 2 billion is all deployed into some type of digital asset.
That's correct.
You're not participating. You're basically, hey, we are digital experts. We're not generalists. We know this field. It's all we look at. This would not be a generalist. I mean, I think the generalists are going to get hurt, right?
Yeah. We that's exactly right. We're a specialist. We say that, this space is idiosyncratic and it can benefit from a singular focus and an organization that is custom built to the needs of the space.
I totally concur with that. Anyone that's using a generalist, whether it's a lawyer or an accountant, if you have any sizable holdings, if you think Bitcoin is going to go to $1 million, you have to change to an expert on digital.
Yeah.
Like for me, it's not even a question. I'm having to move all my professionals around, man, because they're costing me too much money because they don't understand what I'm doing. They want to understand about blockchain. Like, look, I need to give you reporting that you don't need to understand what this is and what the flows are. You can't. Anyway, there's just a lot of legacy perspective being put on this asset class, and it's managed very, 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 very differently than normal assets.
I definitely agree with you, and I share that view. And I would even extend it to say also, you understand how big organizations work. Generalists are often big organizations. Big organizations have bureaucracy and prioritization challenges. The group that is the digital asset group may not be the one with the most clout internally. They may not get all the resources. They say, we need to do this.
Right.
And the manager may say, well, we're not going to do it. I think that when people are investing in this space, which has amazing opportunity, but also complexities, they want to believe that their partner is not going to cut any corners or not pursue anything that should be a priority. And there's no interference from competing priorities. So in addition to just having the expertise to understand everything that's happening, I think also feeling confident that we will always, prioritize and pursue the important things in this space, because there's nothing else that we do is important to many of our clients. So that's the firm. That's Bitwise. Again, I'm really proud of our track record. And in terms of who we serve, when people talk about, to provide an analogy, when you talk about businesses, it sounds like one big, homogenous group, but actually businesses are very different. There's Fortune 500 enterprises. They're massive. They're multinational. They have tons of layers. There's SMBs, maybe 100, 500, 1,000 employees. They're smaller. They're doing different, they have different considerations. There's mom and pop shops. There's sole proprietors. There's people who are doing, set up an LLC to be a consultant. Those are all businesses, but when you look at them up close, they're actually very different.
Yeah.
For us, we serve investors, and from a distance, you might say, well, investors, okay. But in reality, up close, the investing landscape has many segments that have different considerations. So, I think intuitive to most people, because everyone is an individual investor, is what I would call self-directed individuals. Those are people buying, making their own decisions with their own money. They might be buying through an IRA, or they might be buying through a brokerage or an app. Those investors can access our ETFs. We have 6 ETFs, our Bitcoin ETF, the Bitwise Bitcoin ETF. And there are investors of that kind who use our products because they like our expertise. Much of our time is spent on what I would call investment professionals. So these are investors who have some training and responsibility for generally other people's money. The core segment of that we focus on is wealth managers, who in the US manage over $20 trillion. That could be an Edward Jones advisor, a Goldman Sachs advisor. It could be an independent firm. And they're doing an incredibly important and valuable thing, which is they've been entrusted to help their client accomplish what they want to accomplish with their money, retire, buy a house, send a kid to school. And they're trying to map the investments they make to those aspirations. And so we go and work with them and say, there's opportunity that can contribute to those goals in this space. We have products to access it, but a key component of what we do for these types of clients is that we also provide a relationship with expertise. If the nephew comes home from Thanksgiving and says, you know, Bonk is the most important new coin, you know, Dad, Mom, we should own it. And then Dad or Mom goes to the advisor and says, can you tell me about Bonk? The advisor's got like 99 other things going on. They don't know what the heck Bonk is. But it's their job to be informed and be able to steward. So what they can do is they can then turn to us and say, hey, can you give me what you have on this? Or can you brief me on this really quickly? Or can you shoot me a note that I can use as talking points with the client? And that is very important to them because their job is to inform their clients, be well informed. And so they use the products, which are high quality, but they also value having the relationship where they have, you know, a group of experts they can turn to understand what's happening around them. And that audience has really come online with the Bitcoin ETF. It was very hard for them to invest in this category any other way. And so we're starting to see tons of advisors allocate to the space. Today, to contextualize it, there are over 3,000 wealth management firms, teams inside of banks, family offices, and institutional investors that use a Bitwise product.
How many did you say?
Over 3,000.
Okay.
And again, the combination of the simplicity and peace of mind that comes with the Bitcoin ETF, it works with their platform and all the different tools and processes they have. And then the relationship with Bitwise, I think, has been really empowering. And we're starting to see a lot of advisors say, this would really benefit my client, I'm going to put it in their portfolio, or this would really benefit my client, I'm going to bring it up at our next check-in and see what they think. So I think that trend is afoot. And I really think we're in the early innings of it. I think that there's so much room to go on that front. So of course, on the investing landscape, there's individuals, there's advisors manage north of 20 trillion. Individuals are somewhere around 10. Endowments and foundations are another camp. They're maybe at 2. There's pensions, which are north of 25. So there's a few different segments. We serve all those segments, but in particular, financial advisors are a massive one that has really just come online with ETFs and is a huge part of our client base.
Did you say that the individual pool is 10 trillion?
So there are estimates somewhere around that. Yeah, the estimate I've seen is that there's about 10
trillion. I did not realize that it was that big.
Yeah, it's quite large.
That's impressive. Okay, so you're seeing these investment advisors with clients begin to do allocation into the ETFs, into Bitcoin, now that the ETF has been approved? Is that what you're actually seeing flow?
Oh, absolutely. Absolutely. I think we've had almost $1 billion of flow in the first month or so. I think across all the Bitcoin ETFs, there's been maybe $4 billion of net flow in a month or so. This is historic. In the 30 years of ETFs, our ETF, BlackRock's ETF, Fidelity's ETF are all in the 25 biggest launches in history. In 30 years, there are tens of thousands of ETFs. So the amount of demand has been substantial. To put a quantification on the amount of demand, we do a survey every year. We have for the last 6 years of financial advisors asking about their perspective, attitudes, actions towards Bitcoin. And in our survey that came out at the beginning of January, 88% said that they were waiting for a Bitcoin ETF to allocate to the space.
Yep. That's what I've been saying. My research shows me that less than 12% of ultra wealthy people, I think that's about 62 million millionaires in the world, and then another 406,000 ultra wealthy families. Just when I do that math and go, look, less than 12% of these people have deployed a penny.
Oh yeah, absolutely.
That's the other thing. Like the allocation is so tiny.
It's so small. We're so early. It's hard to believe. I've lost much of the color of my hair. It feels like Bitcoin has been around forever. It feels like we can't possibly be at the beginning of this thing. But the reality is, in a lot of ways, 2024 is the beginning of the journey for a large cross section of investors. Bitcoin today is a fascinating thing and incredibly powerful, but it's worth less than Facebook. It's worth less than one company.
Totally.
It's worth less than silver.
This is why I was trying to bring it back to, hey, don't worry about the silver and the gold market. Worry about something that's similar to Bitcoin, which is Meta and Twitter.
Yeah.
Twitter paid 44 billion. Okay, let's remarket to 22 billion. You can't tell me that Bitcoin's community value isn't worth at least 40 or 50 billion dollars.
It has a much bigger opportunity. So I think it's still so small. And again, for all of us who've been following it, invested in it, doing things in the space, it's hard to believe. But for many busy investors, they haven't been spending that much time on it. They've read some things, they've had some conversations, and game time began in January.
Yeah.
January was like the first time that Bitcoin got called up from AAA to the pro leagues. And, January was the first month. It was the first game. And it's looking promising. And now eyes are on it. But
when you say it's looking promising, I'm sure you meet with all your cohorts that are running ETFs. And did anyone expect this flow?
I think at this point, people have been pretty blown away. I mean, there were a ton of products that launched. Not all of them ended up being successful.
Yeah.
BlackRock has been hugely successful. Fidelity, we've been fortunate to be successful. So I think all of us have been impressed and kind of blown away with how quickly they've been taken up. It's not that we didn't think that they would be used for billions of dollars in investments. It's just that happening in just 4 weeks. Again, a lot of the investors who value, an ETF, they're busy. They're worried about, should I be going into NVIDIA? Should I be coming out of NVIDIA? Should I be going into value stocks? Should I be coming out? Should I be going into international stocks? Should I be coming out? Will they be a dog? Is real estate, are there great opportunities, or should I be running for the hills? Are corporate bonds attractive, or is there a lot of risk in the system? Is the Fed going to cut rates, or are they not going to cut rates? They got a lot of things to juggle. And then they're like, oh, wow, there's a Bitcoin ETF now. That doesn't mean that they clear their schedule for the week and say, stop everything. All I'm doing is figuring out how to put this in portfolios. So given that backdrop, which is that it takes some time for traditional investment professionals to be able to look at these things and incorporate them, the fact that there's so much demand that even just the portion who had the time in the first few weeks amounted to billions of dollars, really, I think, signals to us that there is a ton of value and demand in this category. And I think, I think BlackRock would probably, Fidelity would probably, and we would definitely say we've been impressed with how quickly these things have gained traction.
Well, Hunter, considering the ads haven't even started to launch, right? The marketing, it took me 2 years being in crypto. I'm running around being Mr. Critical going, man, y'all's marketing and sales department sucks. It's horrible. And then I was like, oh shit, they're decentralized.
Right.
Oh, of course their marketing is horrible. You're just hearing the loudest guy in the room, or the circus in this case. And I think the circus noise, I didn't come into this space for 2 years in 16 to 18 because I heard everybody arguing about whether it was BSV or BTC. I'm like, oh my God, man, I got to get the fuck out of here. I'm going to lose a load of money. And it was at $300, but I wasn't going to deploy $10 million at $300.
Right.
I look at it now and go, oh, I need to sell everything I possibly have because, well, this is the question I have, because I think the flows are from the more aggressive, smaller families. They're going, done, let's go. Yep. And actually, I don't even think the families are making the decision. I think the advisor is saying, I'm going to put $4 million to work today at 43. Mm-hmm. I'll pick the families that I'm going to push it through. I think in this case, it was 250 families, $4 million. I mean, they're buying less than half a Bitcoin, which is really kind of my question. Hey, what do you think the first stage adopters post ETF? These are institutional type enterprise families that worry about compliance, and they're not guys like me that push out on the edge. What type of allocation are they going to make? Is it $2,500? Is it $250,000? Is it $2.5 million?
Yeah, we see the full range. Generally, it's 1 to 5%. And if you're,
can I just pause you on that 1 to 5%? I think I'm assuming there's people here that are working for 80 grand a year and they don't know about really big money. A family that's worth $30 million, are they really going to deploy $30,000 into Bitcoin?
They're probably going to deploy 300,000. If they're worth 30 million, they're going to deploy 300,000 to 1.5 million, maybe 2 million if they're
there is a number though that like the 1% doesn't kick in till it's going to be $250,000 because they don't want the K1s, the reports, they got to pay you fees, right?
Yep. That's right. Yeah. I mean, for many wealthy people, if it's not worth doing in some size, then don't do it at all. It can be a common mindset. So,
but at 250 would be a good entry point, a first initial entry point for a player like this to $1.5 million. And then their thought process on hold time is what? Because they're not 90-day traders, right?
No. This is the buy and hold part of the market. They say, do I want exposure to this asset class or not? And if I do, they're looking to have a multi-year, can even be over a decade of exposure. There are many people who've held the NASDAQ or they've held S&P, certainly S&P, for decades. So I think that they're not saying this is a good bet for the next quarter. That's not what this audience does.
Yeah, I think this is a serious dynamic that Bitcoiners have never experienced. What I call the real money effect. The real money that comes in here and says, look, I'm going to deploy 1. I hope to get to 5 because if this performs correctly, I'm going to keep adding and I'm going to add for somewhere between, they're going to change their slicing. Like I have a lot of real estate with my brother. This is 10-year hold stuff, man. Right. Yeah, so totally. I look at Bitcoin and go, wow, I can actually get into a product that I don't have to call my brother and go, hey, let's liquidate one of these buildings. I can liquidate within minutes. And I can like put in a 5 to 6 or 7 year on top of my real estate, which is really a beautiful thing. Because then you start thinking about, hey, if price keeps going up, I'm going to be able to take this Bitcoin I bought today and turn it into a real estate play, literally collateralize the real estate and use it as an earning stream, selling call options, selling put options. I mean, there's going to be so many things here that we're just beginning to learn once this paper player comes in, the real money players. So you agree with me? You think their whole time is 4 to 10 years?
Oh, absolutely. Yeah. I mean, of course, everyone takes note if something surprising happens. You would notice if, one of your investments moved up or down a lot more or differently than you expected. And so people will, they're not sleeping, but their intention is definitely, this is going into the portfolio. This is a multi-year investment. So yeah. Do
you think that I have a thesis that says that there's so much money on this planet, and I'm talking about sheiks, guys like me, and everything in between. Guys like you, people that built private equity companies, sold their business. My thesis is that we have a world that is at peak investment. I think all these families are already, I listened to Saylor one day, he said, we're going to steal from bonds. We're going to steal from equities. I'm like, okay, I get your point, but I'm not sure that's true. This could be a world where we're not stealing from anything. Actually, the distributions from those investments go in to invest in crypto, which is grossly under allocated in their portfolio, especially if they're at peak max consumption on all their other stuff. This is a last bastion to be able to put like true NVIDIA type capital, right? Like this thing could do much bigger than NVIDIA. If I layer these charts on top of each other, I'm like, man, we have zero adoption here. We don't have any
Yeah.
adoption of Bitcoin. Not really, right? Would you agree with that? The adoption to this point is really tiny.
Yes. Yeah. I mean, it's meaningful. It's meaningful. It's not trivial. But I think it's far from its potential. I think, maybe it's, I don't know the right way of putting it.
Well, let's think about it this way. Like a big family is going to have an allocation of 4, 5, 10% to the energy sector, right? Bitcoin is energy. So I build a case, hey, like those families have to get to 5-ish% of this portfolio. Because this is such a young asset class.
Yes, I think that outside of individuals who have, a lot of flexibility, we're at the very beginning of most of the traditional investment professionals, families, wealth managers, mutual funds, endowments, foundations, pensions. We haven't even scratched the surface of the deployment of those dollars, which is the majority of dollars in the world, into the asset class. So I think it's very, very early.
Yeah, me too. Just to get in the mind of the way these rich people think and the people that manage their business. If we're getting short on time, just let me know.
Yep, I'll have to run at the hour.
Yeah, no problem. When they see price go from $1,650 to $52,000, does that bother them? Does it scare them? Oh, I'm actually having to buy the high, or are they insensitive to price?
There's every flavor of this, to be honest. There are people who are very sort of intuitive about it, and they say, they'll get nervous around 60,000 or whatever the prior all-time high was. I think 68, 69,000, and they'll anchor on that as being a rich valuation. There, I know there's one large investor who is doing the work, meeting with the committee to deploy 7% into Bitcoin 3 weeks ago. And when the committee got together, Bitcoin was at 41,000. And I'm sure that there are people on that committee who are going to be like frustrated. So there's a lot of intuition because the space does not do a good job of providing a uniform framework for how to think about value. Is 50,000 richly priced, or is it priced at a 90% discount to value? Because of the lack of cash flows, you can't use the models that people are used to using for other assets. And so there's a lot of disagreement about it. And that results in some people using intuition, using local highs, all-time highs as reference points. I think that many long-term oriented investors who are now coming into the space are taking a view of what could this be if it's successful in the long-term future? And then they're walking back from that to where it is now. They're not thinking about 50. They're not thinking about 68, 69. They're thinking, okay, I could underwrite that this is a tenth of gold and it's $120,000 or whatever the number is, right? I think that this is actually, people said that Uber would steal market share from taxis. Taxis were a $400 million in revenue business. Actually, Uber was so much better than taxis that they're now a tens of billions of dollars business. They just eclipsed, and some people have that view on gold. If you think of Bitcoin like gold, it's not just gonna eat a piece of the $12 trillion in gold. It's gonna eclipse it because it's so much better and more useful than gold. So I think people form a view of what the thing is, what its potential is over a long-term time horizon, and then they walk back from that. And they may feel some angst about, gosh, I bought last week at 51, this week it's at 45, or last week I wanted to buy at 45, now it's at 51. But I think for traditional investment professionals, there's a longer time horizon view on it. I will also say that is a reason it has been historically challenging for traditional investment professionals to invest in the space, because they do need to form that long-term view and say, am I telling my client and my committee that I think that the opportunity here is a $200,000 Bitcoin? Am I telling him I think it's a $60,000 Bitcoin? Am I telling him it's and how am I going to break down that basis? What is my rationale? Is it's going to eat into the payment system? It's going to eat into gold? Is it something else? And that takes some time and some thinking because they want to have organized their argument or their point of view, and that can be a challenge.
Yeah, their marketing programs and education programs is going to be a lot better than what we've had in the last 12, 15 years, though. That's for sure. I mean, I heard a guy last night, hey, put all your, invest in Bitcoin and put it all on a wallet. No matter the more it is, the more you should put on a wallet. I'm like, whoa, that doesn't make sense to me.
Yeah, I think for most people that doesn't make sense.
Like, this is why your business is going to do so well. People aren't used to walking around with $100 million in their pocket. It's not what real money does. Hey, listen, I really appreciate your time. Where can customers come direct to your firm and load up, or do they have to go through an advisor? And if so, who do they contact?
Yeah, so investors can find our funds if you search Bitwise in a brokerage account. The Bitwise Bitcoin ETF is in on almost all the brokerages. They can email an advisor if they work with an advisor and say, "Hey, I want access to the Bitwise Bitcoin ETF or whatever product."
The symbol
they can also come to our website.
The symbol is BitW.
BitW is our index fund, and BitB is our Bitcoin ETF. And you can also come to our website, bitwiseinvestments.com. It lists all the funds. You can get in touch with us. You can subscribe to our research and market commentary. So any of those approaches are different ways that investors engage with Bitwise.
And your whole team are digital experts, so they're not going to get any analog professionals. You guys actually know what you're doing, right?
We're singularly focused in this space, and we've been doing it for quite a while now.
Yeah. Hunter, thank you so much for your time. If you guys are interested in the ETF, you should contact his companies. He's really, I'm impressed with what they're doing. I'd love to chat with you about some of your strategies later outside this phone call, just maybe for my own portfolio. And thank you very much, Hunter. Really look forward to you guys doing great and awesome work. I think we're going to be a multi-trillion-dollar industry, and you're at the very, very beginning. So really exciting.
Me too. This is great, and thank you for having me.
Thank you, man. Ciao.